The year 2020 is gradually coming to an end, and despite the disruptions experienced in the course of the year, particularly the COVID-19 pandemic, we talked about that earlier, investors are boosting the confidence level at the Nigerian stock market towards the end of the year. The market's growth momentum at the beginning of the year could not be sustained as soon as the coronavirus outbreak in China became a global pandemic. In the wake of the pandemic, capital imports to Nigeria fell by 77.88% to $1.29 billion in the second quarter of 2020 compared to the preceding quarter. The National Bureau of Statistics said the leading contributor to the precipitous decline is capital importation was portfolio investments, which includes equities, bonds, and money market instruments. Indeed, huge stock market losses were recorded at different periods during the first and second quarters of this year, as COVID-19 turned out to be a double whammy of health and economic crisis. But following the easing of traveling and quarantine restrictions, the Nigerian equities market somewhat appeared to be on recovery in the third quarter of 2020. Let's now analyze the performance of the Nigerian Stock Exchange, look at the end-of-year trading pattern, and the year 2020 in review. It's a big one, but I have the right person in the house to do that for us. He's a stockbroker and a financial analyst, Mr. Rotimi Fakaijo. Thank you very much, and it's good to see you.
Good afternoon.
It's always a pleasure to have you on the show. First, last week, a lot of negatives. Despite all of the optimism, we just saw negative for like 3 days to the end of the week. What's happening? What's playing now? Take us through what would have prompted that.
For last week, I think there was news in town that the CBN was going to do a special treasury bill or OMO operation. And that actually caused a lot of distortions. So investors felt that rates were going to go high, and those who had already subscribed for the T-bills had to liquidate positions wherever it is in order for them to be able to meet up the payments. Now, when all of that was happening, the only viable way to raise liquidity by investors as such was through the equity market. And at the same time, because they felt that rates are going to get better with the CBN introduction of special T-bills, then the market started going down because people were offloading their positions. And if you look at the volume of transactions done maybe on a day like Wednesday last week, GT Bank did as much volume as about 82 million in a day. And that day we saw a spike in the volume and value of transactions done. So, and when it now seemed as if those things weren't really going to be, then the shift is now coming back to the market. And I believe very strongly that this time around is going to be well sustained.
Wow, good. Let's now look at quarter-on-quarter performance of quoted companies as we look at 2020. It's been an eventful year thanks to COVID-19, to the lockdowns, and all of that. Let's look at them.
Well, I think the results churned out by quoted companies, depending on the sector that you're looking at. Industrial goods, I think they did quite well. The banking sector, they didn't do too badly. The consumer goods, except for Nestle, we didn't see much of good performance from that sector. Then the agricultural sector, which is Okomu, then the telecom, those also were good. And when you juxtapose the total performance, I believe with the cumulative effect of COVID-19 and the lockdown, I believe the quoted companies have done fantastically well. And they've been able to sustain profitability, though in some cases we saw it inching down by about 5–10%. And that in being able to sustain profitability, that also implies that they'll be able to sustain dividend payments by the time they close their book at the end of the year. So that alone is a succor to investors, since the money markets or the fixed income securities is not anything to go near, because the kind of return they would have expected is no more there. So the only sure way whereby investors can put their money at this time is the equity market. And one good thing I keep talking about at a time like this, you made mention of the capital outflow. There was capital outflow, and there was also a reduced capital inflow. Like so far, the total foreign portfolio investment in the market, the one done within the year up to September, going by the figures given by Nigerian Stock Exchange, the total was 510 billion naira, of which 65% is an outflow. 65% of it is an outflow. And when you now want to look at the seemly inflow, it might have been that investors, some of those foreign portfolio investors sold, part of those 35% may be a reinvestment and not a fresh capital importation into the system. So what I'm trying to bring out in this is that we're likely going to see a sustained performance of the market because the ripples and the ruptures caused by foreign portfolio investment now and then, since they are not here as they used to be, that kind of ripple and ruptures may not really be forthcoming going forward, except if they see the potentials in the market for the coming year and they move in their funds in January. That is the only way that can change the scenario that we have presently. So all in all, investors that have their money locked in the equity market right now, they've taken the best decision.
Because back to the treasury bonds and treasury bills and bond markets that you talked about, it's not been attractive for a long time. The percentages are very low. Even interest rates now on our little savings also remains very low. How do you see all of this affecting confidence around the market?
I think where confidence may come in, or where confidence may be non-existent, is the inconsistency in policies that affect the economy. Now, we've never really had a consistent policy framework. A CBN governor will bring up his own ideas. Another will come, bring up separate ideas. A minister for finance will come, bring up some ideas. Another one will come in, cancel whatever had been in place. So the thing is, what will really engender confidence is continuity and consistency. But as those two are not really present within our system, then definitely we can't expect any form of confidence within in our economy.
Well, just like the other guests said, some analysts, like you have said, that there need to be some aggressive policy decisions that would embrace broad reforms that would help address all of this. I'm looking at burning economic issues now, you know. We know what's been happening with GDP, inflation, the figures are to come out anytime from now. So what are these aggressive things that government needs to do? The guest earlier said we need to domesticate most of what that we do. That's part of it, but what more can be? Because that confidence in the stock market and across that environment should also be sustained.
Well, I think the aggressive thing to do is to make the investment space very attractive and conducive. So if the investment space is very hostile, then you cannot expect anything good to come out of it. And for me, I believe strongly that we have enough funds sitting in different banks, lying idle, that will actually revive this economy. But people don't have confidence to invest their funds there. So they rather keep it in the bank or keep it in septic tanks in their homes. And that we know cannot help any economy. We were just discussing out there, and I was with a friend, and I was making mention of the rates that you get from microfinance banks. Microfinance banks is supposed to sustain those who are petty traders, who don't have capacity to borrow more than maybe like 300,000, 1 million, or 3 million at the peak.
Yeah.
Now, such people are getting funds at 4%, 5% per month. When you annualize that, we are talking about 48 to 60% in a year. Now, the fear of you having to pay 60% for a year definitely will not allow you to take viable decisions that can actually sustain your business. So I was saying that for a year, we shouldn't have a situation whereby, monthly, whereby a microfinance bank will charge more than 1%. If we have that, we're definitely going to resuscitate the economy and add more life to it. But much as capital is expensive and inaccessible, then definitely the return of that capital back to the lender is going to be extremely difficult. Yeah. So we need to take a quick reform at that. And the aggressive thing is where there is no security, there can't be any investment. There can't be any investment. So government, everybody has lost hope with the ability of this government to actually secure the system. Every day we hear things happening. The recent one, the 300 and 33, we don't know the exact figure. I tell you. But that alone is another thing worrisome. That is very, very worrisome. The food belt of Nigeria, that's where they cannot go back to their farms to do harvest. So what are we going to have when we enter into January, February, or the first quarter of the year? So everything is still revolving around the government not doing what they are supposed to do. The day they begin to take the right decisions, everything will change for better in this country.
The figures are out. The market is closing positive today, Mr. Fakari-Joy. It's a good way to start the week. 1.73%. Top advancers, we have Airtel Africa, we have Dangote Cement, we have Guinness, WAPCO, Bogas. Top decliners, we have Nascon, we have Adover, International Breweries, UBN, and Cortex. Tell us how this comes to you today to start the week.
Well, this is quite expected. What we saw last week was unwarranted, I want to use the right word now, unwarranted loss in prices. Wow. Now, the policies that I make mention about came up, or the rumor came up. Yeah. And investors said, let me bail out before it's too late, as is always the case. And last week I was telling some people, I said, this decision these people are taking, if you are selling GT Bank forcefully at about 32.50 or 33, you're going to come back to buy sale at 35. Because what else are you going to buy? So, and we saw Dangote Cement losing in a day about 16 naira. And that actually was what brought down the market heavily. Now, we expected a rebound, and that is what we are seeing right now. But this rebound that we are seeing now is just the beginning. We are still going to see a higher level of rebound, and everybody is going to think inside him or herself that, had I known, I would have left my money in this market.
Oh, my goodness. So you think this is the time for everyone to actually still leave their monies in the exchange, you get a profit at the end of the day if you're patient? Because, you know, this seems like a long-term investment.
It is, and that's what has actually disrupted the market. In time past, people invest 5 years, 10 years. That was when there was still serenity and sanctity within this, and sanity within the system. Yeah. But now people want to bring in money 3 months and end the next month. It doesn't happen because there's no fixed income security. So, but if we have sustainability the way we are seeing now, and we don't have the disruptions by the foreign portfolio investors, then definitely we're going to have things much better. I was reading somewhere that serious-minded governments don't encourage short-term portfolio investment in their countries.
Good.
Serious-minded governments, they don't. China will never encourage it. And that's why you see their economy booming.
Because they're coming to tap.
You are bringing in funds that won't sit at least 3 to 5 years, then don't bring it, because it will only cause disruptions within the system. Yeah. So it adds no benefit to our economy. So our government, CBN, has to take a serious look at this. Don't attract short-term investments. It doesn't add any value to us as a nation.
Let's round up on this note. I know we're almost out of time. IMF, World Bank are out again saying like 11 million Nigerians will get into poverty. We already know the figures that were out before now, talking about the poverty level in the country and COVID and all of the challenges. We know more of this will happen. How do you react to some of this and the recommendations from the IMF and World Bank? Let's end on that note.
Well, I think, first of all, I will first their figures. Because if you go to Interland, you will see that the level of poverty is actually more than what the figures are saying. People are really hungry. So now, with this figure, IMF has come out to say that they are not looking at our loan request of $1.5 billion.
Yes, yeah.
So where is Nigeria going to get fund to sustain about 5 trillion naira deficit in year 2021 budget? The one outstanding for 2020 is yet to be taken care of. So for the economy, for the budget 2021, there's already a gleaming failure, except otherwise we do something quickly.
Mr. Rotimi Fakayejo, it's a good way to leave it. I always like it when you break it down, the NSC and even economic issues. It's worrisome, and we hope that government takes a cue from what we're saying, and one or two things, it could be positive one way or the other. Thank you again for your time. I appreciate this.
A pleasure.